So you know how life is super busy and there's so many financial products and there's so many financial people, it's hard to make financial decisions. I'm Adam Gain, owner and financial coach of Gain Financial. We help families with businesses as a one point of contact to integrate, coordinate, and organize your whole financial economy so you can save time and energy and live the life you want to live.
Okay, so I wanted to talk about how do we create a system within our corporation to save money, ideally save money within the corporation, but also how to create a system using accounts so that you can log in and you can know the health of your business within 10 seconds. All right, so this is a system called Profit First. It's very in line with how we teach about saving and paying yourself first. The guy that designed this is a whole book on Profit First that you can read and go way more in depth into it. But I help a lot of my clients set up these accounts and make sure that it's structured and it works appropriately for them. More or less, the accounting of a business, they typically say income minus expenses equals profit.
Right.
And what this guy's trying to do is say revenue minus profit is equal to expenses. He's taking the profit out right away so that you know what, and like you can allow your expenses to get to a certain point.
So how do you know how much profit to take?
Well, that's what we're going to talk about.
Okay.
Good question. So let me just give you a brief overview of the system first. So what we do is we set up a few different accounts within your corporation. You can go and go to any of the big banks and set up multiple accounts. A lot of them you can set up as savings, or you can go to other banks. Like we use a Manulife business account. It's a free account to set up, and it gets an actual rate of return inside of it. So you could do it through that if you wanted. So the first account is where all of your income goes in. So this is your income account. And all of that money is accumulated into that account. And once a month or once every 2 weeks, your job is to go in and to move that money into these other accounts based on percentages. So whatever number that is, you're going to divide it by the percentage and move it to these other accounts. At the end of when you move those
every 2 weeks, you say?
2 weeks or every month or every quarter, like when it depends on your business. But you want to zero this account out. That's important. So what you're doing is you're moving the money into these other accounts.
Now, at a certain percentage.
At a certain percentage. So what are these other accounts? The first one is your operating expenses. I call it OPEX for short, OP, operating expenses. So that one typically is going to have the biggest percentage. It depends on your business. Every business is a little bit different, and we'll help set up those percentages. Then you want to make sure that you have money in your tax account. And that tax account is going to pay your corporate taxes and your personal taxes if you're a small business owner.
Okay.
You want to have owner's compensation. So that's how much you're going to pay yourself. And now typically we also want to set up a salary. So you should have a base salary that you're paying yourself, ideally. A lot of small business owners are just taking money arbitrarily out of their business. They don't really know what they're spending. But it is important to have a consistent income on your personal life and try to keep as much as you can in the corporation, and then decide where is that money best utilized, whether it's investing in the business or having investment somewhere else, moving to a holding company, lots of different options.
Okay.
So the next account is your profit. And so that means that there's money going into the profit account every single month or every biweekly, whatever it is. There's always money going in there based on a percentage. And that profit, typically you can look at it like quarterly maybe, and you can say, how much do I want to move to for myself? Do I want to take a bonus? Do I want to grow my business? Do I want to buy a piece of equipment? I can decide, and I can make a diligent decision with this money. And a lot of times what we do for clients is we actually just have that money and we route it over here if they have a holding company. And this is where we actually have a corporate WCA. You know, we've talked about WCA, which is their wealth coordination account.
Right.
Yes.
Ideally, that we would want that WCA in the corporation if you are a small business owner or if you have a corporation. So as much money as we can keep in the corporations, the better.
So what's the advantage of moving the profit from that account that's in there into another account?
Well, this is probably like your holding company over here. It depends on the setup, but it's the exact same as what we teach in the personal side, is having segregation of money. So even if you just did have one corporation, we could open up a separate corporate account with a different bank and have segregation. So when you log into this other account, it's still in the same corporation, but now you know this money is used for you and your future. And you can have all of like rental real estate, you can have whole life policies, you can have investments within corporations.
Okay.
But you wouldn't move all the profit into the WCA, would you?
It depends. Everyone's a bit different. Like it depends on how we set this up and the percentages. We could just allocate profit to say that that's for you and your savings.
Okay.
And the last account is something that I've added to this system. And I always explain this to clients, and it's totally up to them, but I like to have an account that's just for giving. And there's a percentage that goes in there, and any money that's in there, it's just to help others. So it's
That's nice.
charities, churches, whatever is important to you, then you can give that. And in my company, you know, I make sure all my employees have a chance to give to what they want. So if we have money in there, then we can say, hey, you can go give this to wherever you want. So
Okay.
now the percentages are based on a bit of income level. So here are your typical allocation percentages. So a business that makes between 0 and 250 revenue, typically about 30% OPEX, 5% profit, 15% tax, and 50% owner's comp. Now, a lot of times we'll get rid of the owner's comp.
Owner's comp. Wow.
That sounds good to me.
Everyone's a little bit different. These are just kind of like the recommended in the book. A lot of times we'll get rid of this owner's comp account and just put it in OPEX, and then we'll take a salary from OPEX because it is an expense of the business.
Right.
Now you can see as soon as you start going and you start making more revenue, you can start increasing your profits, and your tax stays the same the whole time because obviously if you're making more, you're going to pay more tax. There's going to be more money in the account.
Right.
And the operating expenses goes up as well over time because that's just a very typical business. Now, every business they're very drastically different of how they're structured. So again, we try to figure that out and help the clients set these up.
Okay.
A lot of times we have to start where you're at, and then we can move to what target allocation percentages. So you might be at 60% owner's comp, but you want to get to 30, and it just takes time.
Okay.
More or less,
So
it's a very
individual.
Yeah.
Really, depending on, yeah.
Yeah.
Mm-hmm.
So it takes a little bit of time to set up, but every single client that I've ever had set this up sees benefits in like right away. Like you can see, like you just see the health of your business right away. And you, as a business owner, every month you get to see how much income came in. If that's fluctuating, you get to see those differences. You also want to keep an OPEX. You want to have a base in there. So if that's getting below the base, you're going to know that immediately.
So
And a lot of
that gives
people-
you some ideas of what to look at and what to look for.
Yeah. So a lot of my clients, they have like one account and all the money's going in there, and they're like, oh, I think out of that's about 60,000 is going to tax, and there's some that's going to this and going to that, and I'm going to buy that thing, it's going to go to that. So what's actually there for their operating expenses? What's their base? They don't quite know.
Yeah,
And-
there might not be much there.
I really
Yeah.
like that it has a separate thing for tax.
Yes.
So, it's always going to be there. You're always going to be paying tax, and knowing that you have money there to pay it
and
That's
for, and
great.
for profit.
Yeah.
Because if the profit isn't there, then you'll probably just spend it.
Yep. All right. Any questions on that?
No, I like it. I think it's an excellent.
After about a year of doing it, you come up with your own figures.
Percentage-wise, you
Yeah.
talked about.
Yeah, we work
Yeah.
them out and we test them and we change them until it works. It does take a bit to implement, but as soon as you get in the process of it and you start just zeroing that account out each month, it gets very simple. One other thing I should mention is when you actually create these accounts, you can go into the bank and you can actually name each account to these things. So for instance, you can say OPEX, and then whatever percent you're at, you can put the percentage, and then you can have a target allocation percentage where you're trying to get to. And every time you see this, you're going to see the account name and you're going to say, okay, right now I'm doing 60. My goal is get to 40. And so you can do this for all of your accounts, and that'll kind of give you a little bit more simplicity around it as well. And every time you go in there, you don't have to remember what percentage am I doing.
Right.
Yeah.
Thanks a lot for watching that video. Check out some of our other videos. Subscribe to our channel. Feel free to reach out anytime. We're looking to work with great people long term.